about to drop the hammer and dispense some indiscriminate justice.
Ladies and gentlemen, somebody has just dishonored me, my family, my child, everything that I hold dear. And do you know what this man did? Did he steal my wife? Did he burn my house down? Did he slap me in the face and call me a punk? No. He trashed my ETF, the VTI ETF. And I am very pissed. And I must respond to this degeneracy and blasphemy. Welcome back to Strongman Personal Finance. I am Christopher Bell, certified public accountant, long-term boglehead investor, author of the book Stop Being a Broke Loser. You can get it on Amazon for $3 or $10 for the hard copy. And hater of people that trash the VT ETF. Now, who is this young man on Seeking Alpha that insulted my baby, my deliciousness, my superstitiousness? Dean Young. Let's see what his qualifications are. He has a bachelor's in economics and mathematics. I focus primarily on investing in the tech sector. Of course, tech only goes up just by tech, bro. All right, so here's this article this fella wrote. And he makes one fair point that's not really that good of a point. But everything else is pretty much trash. So he says, Mr. D, I'll call him Little D. You get it? Don't bother with VT. It's a diversification of VTI. Ooh, boy. VTI, which contains nearly 4,000 US-based companies, is already sufficiently diversified. You know what, Dean? I'm going to pull up something here real quick, okay? Hopefully you can see this chart well. Maybe we'll try this one. Yeah, the other one was good. Now, if you look at this chart, this is a chart that starts in 1969 and it goes all the way to 2016. And it shows you whether U.S. stocks or foreign stocks outperform for a period of time. Now, if you see orange, that means foreign stocks outperform U.S. stocks. And if you see blue, that means U.S. stocks outperformed foreign stocks. Now, what do you notice about this? My voice cracked. What do you notice about this, ladies and gentlemen? Doesn't it almost look like it goes in cycles? International outperforms, U.S. outperforms, international outperforms, U.S. outperforms, international. Are you seeing a trend here, ladies and gentlemen? Now, what class of stock has outperformed recently? Oh, it's the United States. You know what that tells me? There's probably going to be some kind of reversal where international stocks will outperform. Maybe for a decade. I don't know. Now, by saying that VTI is a diversification because it has international stocks, what kind of crack are you smoking? Have you read a history book, little D? Obviously not, okay? This is why you own the world. Because there are cycles, and you cannot predict when the cycles are going to happen. But I guarantee you, at some time in the future, international stocks are going to freaking crush U.S. stocks. Because right now, U.S. valuations are pretty freaking ridiculous. But yeah, you don't need international stocks because like the U.S. stock market did well in the last 10 years. Read a freaking history book. Using VT to gain access to international segment has minimal impact on diversification and actually decreases the quality of the portfolio. Yeah, I can see that. Just go U.S., bro. And even if investors insist, because only idiots would insist on international diversification, VT can be mimicked with a lower overall expense ratio by using VTI and VXUS. Yes, that's true, but when you do that, you tend to not hold the world at market cap weights. VT holds the world at market cap weights, which means you're not timing the market. Whereas if you do VTI, VXUS, you might be tempted to be like, well, I'm going to trade here, maybe overweight international, maybe overweight US, and you don't want to do that. Because even if you can see a trend with international US outperforming, you don't know when it's going to happen. So just hold the freaking world at market cap weights, okay? You may have to pay 0.02% more, but it's worth it if it prevents you from timing the market and making one stupid decision and overweighting an asset class that actually turns out to underperform because you timed it wrong. Don't time the market. You don't know what's going to happen in the next couple of years, okay? You can have a good guess, but by owning VT, which means you own every company in the world at market cap weights, so large companies are more represented in your portfolio, and small companies are less represented. Market cap weighting. That's the way to go, okay? This pisses me off. Blah, 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 blah. But the thing that really annoys me is he calls it diversification, right? It's ridiculous. If you don't know anything about history, yeah, you would just look back at the recent performance of a stock or a market as a whole and say, oh, well, that's all that matters because it did good in the last 10 years. And if it did good in the last 10 years, that means it must continue to do good, which is complete and utter BS. Complete and utter trash, because that's not how it works. Different stock markets around the world are going to do well. And if you really think about it, think about the United States, okay? Yeah, we're a great country, but how much of the world's population do we have? And if you look at the rest of the world, where there's a lot of people and a lot of great businesses, those businesses are a lot cheaper than U.S. businesses. And think about all the emerging middle class in, China and India and across the world. What do you think is going to happen over the next 20 or 30 years as more and more people join the middle class in foreign countries and spend money? Perhaps could it help boost foreign stocks? It's a possibility, okay? That's why you own the world. I don't care what the recent past was. It doesn't matter. You're thinking and you're investing for the long term. Now, his only legitimate point, and to me, it's just stupid. He's like, well, you could have VTI, which is the U.S. stock market, and VXUS, and you'd have a 0.05% expense ratio, whereas VT has a massive expense ratio of 0.03% higher. Wow, that's just going to bankrupt you, ladies and gentlemen. But like I said, it's better to own the world at market cap weights and pay just a smidgen more so you don't get tempted to time the market, okay? Jesus. VT adds minimal additional diversification. Wow. What's he saying here? VT already has an incredibly high correlation with VTI, typically about 90%. Even if it drops, there's still about 80% correlation. Okay, I don't know if that's true or not, but just think about it from a common sense perspective. Would you rather own every company in the world and not try to time the market, or would you rather concentrate yourself in one freaking country? That's crazy. Even the United States. There's a big world out there, ladies and gentlemen, okay? Think like a liberal every once in a while. So, yeah, I'm sure they're correlated because VT has a lot of U.S. companies. And what is it? 60% of VT is the U.S. stock market. I think that'll change in the future, but as of right now, yeah, VT is going to be highly correlated. But you don't know 20, 30 years down the road what percent of VT is going to be international. International might be a much larger slice of the pie. That's my guess, okay? Look at all the emerging markets, but whatever. Okay, so what else does he say? Look at the top 10, compare the top 10. Yeah, whatever. Long-term investing, doesn't matter. If anything, international holdings may actually increase the risk profile of the portfolio. Many of the international holdings are based in international countries and may not directly trade on U.S. exchanges, leading to less scrutiny and more government interference. Yeah, that's one of the risks you take with investing internationally, okay? But I'd rather take a little bit of risk and buy other companies around the world than literally place all my hopes and dreams in one country, especially the United States right now. Massive government deficits, massive government debt. Massively high valuations. It's insane, okay? Scares the crap out of me. Anybody that's 100% US, you need to be a little bit worried, okay? Or at least be prepared to have a flat decade. That's all I'm saying. But whatever. The international companies are worse than US companies. So here's where he gets really stupid here, okay? So, Jesus. So what he does is he shows the performance of the different ETFs. So he shows the orange is the total US stock market. The purple is the world, and then the blue at the bottom is the international. And of course, VT is right smack in the middle, basically, because as markets perform differently over time, VT is never going to outperform any one market because it's composed of all the markets in the world. So yes, if US has done good in the last couple of years, okay, that doesn't mean anything. What that actually means is you're probably buying in at a high point, and you might have lower expected future returns. Whereas if you're buying VT, you're buying some US, which is expensive, but you're also buying international, which is cheap, but you're not timing the market, okay? VT will never dominate every single ETF. But the whole point of it is you pay a low expense ratio, you own the entire world at market cap weights, you don't try to time the market, and over the long run, you approximate the returns of the world market as a whole. You're not going to be Like there's probably going to be one or two or a dozen funds that do better than VT, but which fund is it? Who's going to outperform? Which country is going to do the best? Which individual stock is going to do the best? You don't freaking know, okay? That's why it's best to just buy the world, max your tax advantage accounts, and let it ride. So when international outperforms, you're capturing that. If US sucks, you don't get hammered as much because your entire portfolio isn't tied up in the United States, okay? So no, I think this article is complete and utter freaking garbage. And I don't think this guy knows anything that he's talking about. Let's read his conclusion. Investing in VT to gain more diversification doesn't mean you will get better or safer returns. In the long run, yeah, you will get better returns. In fact, the data shows the opposite is true because I looked back 8 years because I'm so smart. Investing in VTI is shown to have sufficient diversification for low cost. Stupid. All right. So just because you read these articles on these websites doesn't mean these people know what they're talking about, okay? You can just look at this freaking chart right here. I mean, how can you dispute this? International does outperform for long periods of time. And if you don't have international, you're going to be missing some of those gains, okay? And no, you can't time the market because nobody knows. I mean, like, look, sometimes the outperformance is over, a couple years. Sometimes it's very quick. You can't time it, okay? That's why it's better to buy the world. Anyway, I hope I convinced you to have a total world diversification. But if you don't want to, go ahead and do VTI or VTI, whatever you want to do. But in my humble opinion, I think exposing yourself internationally, especially with the risk of inflation and how the U.S. stock market is so expensive right now, I think you're not going to go wrong owning VT, okay? That's it, ladies and gentlemen. Like, subscribe, tell your friends about me. Have a wonderful night.